We have had 2 years of unprecedented growth in sales price, unit sales, everything. It's been a booming real estate market, like the biggest booming real estate market that we've seen since the 1920s. So you already know that. But what you want to know is, where are we going from here? Are houses overpriced? Are prices dropping like a rock? Is the market falling apart? Or is it just flattening out and going to be steady Eddie as she goes? What if I'm a buyer? Should I buy now? What if I'm a seller? Am I still able to get the prices from a few months ago? Where are we at? We're going to dive into the data and take a quick snapshot that will help you to make these kind of decisions so that you know better what to do with your real estate investments. So let's take a quick look here at a market report that we have just published. This market report is available in its entirety through one of our associates at Premier Sotheby's International Realty. So let's take a look at the data behind it. First of all, talking about the national market, you already hear this over and over again. You know that we're already on the cusp of a recession, or we may already be in a recession. Most economists believe that we're going to continue with that well into 2023, if not all the way towards the end of 2023. But there's more to it. There's inflation, there's interest rates, there's supply chain, there's all those things that come together, which add up to say the economy is struggling a little bit. And as most of us know, real estate sales are very much part of consumer confidence. But it's not all bad news, because there's actually some good that happens when we have an inflationary market. For one, inflation going up actually historically raises the price of real estate appreciation. It is not, the appreciation on houses is not quite as fast as the rate of inflation, but it does keep step with it. So does that mean that your house is going to continue to appreciate? Not necessarily. Some houses are going to lose value. Some houses will be flat. And yes, some homes are going to appreciate. So it's going to go back to more of a normal market where you see location, 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 and condition of house are really important, versus the last 2 years where people were just buying anything that they could buy. It was a feeding frenzy. Really, for the last 12 months, it's been a feeding frenzy with multiple offers, escalation clauses, people competing for houses. That has come to a screeching halt. But are we back in a normal market, or are we going to see the market drop? Let's look at the data. First, we're going to look at the single family home data, then at the condo data. Single family home supply, that means inventory, the amount of homes that are available for sale. Here we can see that on single family homes right now, we're at about 2,400 single family homes. Wow, versus at the end of Q1, we only had 942. So we really had about 5 quarters of non-existent inventory, just unbelievably low, not enough to fulfill the need for this market, even in a slow year. And then it jumped from 942 to 2386 since last quarter. That's a 153% increase in inventory. Wow. So you could say, holy cow, the market's going to crash. The inventory is going up like crazy. Well, not really, because if you snapshot it back all the way to the same quarter in 2019, we see here that there were 4,702. By the way, 2019 was a normal market. In fact, it was a strong year market. So comparing 2019 with 2022, we're only at 50% of the inventory that we would need in a normal balanced market. What about demand? The actual number of homes that have closed and sold. We see here that in 2022, we sold a lot less than we did in 2021. Is that because there wasn't enough inventory, or is that because demand dropped? In this case, it's a little bit of both. Q1 22, it was because we did not have enough inventory. There was more demand than we could handle, and there were no houses. Again, back to the multiple offers, escalation clause. But come Q2 of 22, we started seeing an easing of demand. It happened about Easter. Demand just kind of slowed down. All of a sudden, we no longer had multiple offers and escalation clauses. All of a sudden, people were looking at more than one home before they would put an offer on it, kind of like, again, a normal market. And fewer people were coming in and looking at the market. Does that mean the market crashed? Absolutely not. 4,373 homes sold in Q2 is an incredible market. Again, go back to 2019. When you look at the first 2 quarters of 2019 versus the first 2 quarters of 22, we're up 6%. It's a pretty darn good year. Break it down by price point. Here we see the under $500,000 price point, again, single family homes, is down 39% year over year. Well, why is that? There's nothing. There is such little inventory in the under 500,000. Our average prices have gone up to the point where it's very difficult for anybody that's a first-time home buyer or somebody trying to buy in that more bargain area to find anything to buy. And when it does come onto the market, there's a hedge fund or some other company that probably snaps it up pretty quick. That's going to continue to be the case. The bread and butter for the single family is going to be more in the 500 to a million, or even the million to 2.5 million. You look at the 500 to a million and you see a 44% uptick year over year. This is the strongest segment of the market, absolutely hands down. There's an awful lot of retiring baby boomers who have got money, who've been planning on retiring. They want to move to Florida or some other sunshine state, and they are going to do it, regardless of the fact that we're seeing a little bit of a recession or seeing a pretty significant amount of inflation. They've been planning on this, and it's important to them. This is going to continue. We're going to see a lot of baby boomers buying $600,000, $700,000, $800,000 houses going forward. I think next year will be just as strong, if not stronger, in this segment. You get into the 1 to 2.5 million, I think, again, it's going to be very strong. Look at the number of homes that sold over the last 2 years for the first half of the year versus 2019 and 2020. We've seen the bar raised. People that would have gone to Naples or Fort Lauderdale or some other higher priced market are now coming to Sarasota, and they're getting more house in Sarasota versus what they would have to pay in Naples for the same house. You get into the above 2.5 million, which is kind of more the ultra luxury. Again, unbelievable demand. People who would have bought in Naples are now looking at Sarasota and buying in Sarasota. A house that costs 3 or 4 million in Sarasota would have cost 6 or 7 million in Naples. That also will continue, but we see a little bit of an oversupply already in the 2.5 million up. I would say that the 2.5 million right now, supply versus demand, is almost in a balanced market. The rest of everybody below 2.5 million is undersupplied. Average price point, we see that at the end of Q2 of 2019, 401,024, all the way up to 713, 759, now at the end of Q2 of 2022. That is a 78% appreciation rate. Unbelievable, unsustainable, just phenomenal appreciation. What this tells us is people have made tremendous gains in equity over the last several years. And that equity has built up to a point where, yes, there could be a little bit of a price pullback right now. They would still be in great shape, nothing to worry about, because they've got tremendous benefit in everything that they've invested in for the last couple of years. The question is, will this price point of 713 drop back to the beginning, the value points at the early 22, or will it go back further? Basically today, based on the amount of demand that we're seeing and the low amount of inventory that we're seeing, we don't think it's going to drop back into 2021 levels. It may drop back a little bit to earlier in 2022, and we've already seen about a 15 to 20% price pullback on the asking prices. That does not mean on the underlying sold prices, but that doesn't mean that we can't see a further change as we go further into the year. But as of right now, we're going to hold our prices pretty steady. The bar has risen in the Sarasota area. Let's look at condos. For the condos, similar look on the supply. We see a downward slide all the way through 2021 and into 2022. It was flat through all of last year, and now it's had an uptick. There's only 716 houses for sale, condos for sale in the 2-county area, Sarasota and Manatee County combined. That is not enough condos. The condo market is more undersupplied than the single family market is. Compared to 2019, when there were 26, 25 for sale, and we are still only about a third of what that inventory was. I think condos going forward are actually going to have a tougher time supplying enough homes for the demand. A lot of baby boomers are moving here and they want to move into condos. So it's going to be very dependent on new projects coming to market. Here we see on the number that have sold, again, a big drop since last year. This is driven by a lack of supply, hands down. If there was more condo supply on the market, we would be able to sell more of those condos right now. And we are still 25% higher than we were in 2019. And again, 2019 was a pretty normal market. So looking at that, it looks like the condo market is very healthy. Break it down by price point, very similar to single family homes. You have not enough supply in the under 500,000. It's very difficult to find anything to buy that's even halfway decent under 500,000, but there are a few out there. You get into the 500 to a million and you have a very solid market. And really the sweet spot for condos is 1 million to 2.5 million. Why is that? Because of the new construction projects. Almost all the new construction projects downtown have been focusing on an average in that 1 to 2.5 million range for their average. They have a few that are above that, obviously. And I think we'll continue to see that. We'll see more projects that are hitting that mark. Up into the luxury segment in the over 2.5 million, it is really driven by new projects. We've seen a drop in the number of those. Why? Because there haven't been any closings of big buildings here in the last 6 months or so that would be bringing those to market. We've got several projects that are under construction, and when those close in 2023, you'll see these numbers bump back up. Overall, a 26% drop in number of sales, but again, still far more than 2019. And I think it's going to go up next year when we see a lot of these projects close. Similar type of an arc for the average price sold. We went from 322 up to 547. This is a great number to be at. I think we're going to sustain this number in the condo market. I don't see much of a pullback at all because it is simply just not enough product inventory out there to cause the market to go down on the condos. Overall, what does this mean? It means that we're more of a normal market than we have been. The last 2 years were outliers. Anytime that you're doing statistics, you throw out the one that's the most extreme high and the one that's the most extreme low, and you focus on the averages in between. So we got to throw out 2020 and 2021 when we're trying to do some kind of a benchmark gauge. 2019, 2018, 2017, these were solid growth years. These were great appreciation years where you saw more normal appreciation and a solid continuous demand from baby boomers and Gen X. We're seeing more Gen X come into the market now too, who want to build their investment portfolio. So I think that looking forward, 2022 for the rest of the year is going to look more like a 2018 or 2019. And there's nothing wrong with that. Those were great demand years. It just isn't the frenzied aspect that it has been for the last year plus. So we're not going to see the multiple offers. We're not going to see the escalation clauses, or we'll only see them on that really exceptional property that is a unicorn that everybody wants to get a hold of. And there will be a few of those. There always are those in any kind of market. Bottom line is buyers have got a choice. Inventory is increasing. Sellers are no longer in total control. So sellers are going to have to set their price right. If a house is even 5% to 10% overpriced, which, oh, by the way, a lot of them still are, if it's overpriced, you're not going to get showings and you're not going to get offers. So sellers have to readjust their expectation just back a little bit so that it doesn't have the artificial fluff for the price increases that we saw in the first few months of this year. And then your house is going to be very sellable again. Buyers are going to put in 90% offers instead of 110% offers. And they're going to expect to negotiate and land somewhere in between, kind of like we did back in 2018 and 2019. So this is a big pill for sellers to swallow. Some are accepting it, but many have not gotten there yet. The reality is, over the next few months, we will continue to see a little bit of a deterioration in the market, but it's not going down. It's not crashing. It is still an incredibly strong market and a good market. So we're going from crazy down to good, going from crazy down to strong. Not a crashing market. So that's the message that we want to leave you with. You can't stick your head in the sand and not pay attention to it, because it's not just real estate. It is real estate, it's stock market, it's inflation, it's everything in our society that is experiencing this flux. Real estate is one of the soundest investments out there. And a lot of people are investing in real estate right now. So if they want to put their money somewhere that is a good, solid asset, it's real estate, gold, and silver. So think about that. It may be a good time to buy if you buy the right property. It may very well be a good time to sell, because it all just depends on what are your circumstances. What is in your life that is motivating this change right now? Please get in touch with any of our realtors at Premier Sotheby's International Realty who are educated, ready, and able to advise you and help you in making your real estate decisions. Thank you very much and have a fantastic day.